Welcome to another episode of Manay Talks. My name is Elifyavuz, and today we're here with Al Meyers, our tax manager. In this episode, we will be talking about Form 1099. And Al, I want to jump right into it and start by asking, what is Form 1099?
So you hear a lot about Form 1099. 1099 has different shapes and sizes, but essentially it's for any income that you receive, really what's called non-employee compensation. So it could be used for work that you performed as an independent contractor when you're not an employee. It could be for income that you receive from third-party merchant transactions like cash apps like Venmo or PayPal or Stripe, or Shopify. And it could also be for, income that you might receive for like maybe rents for a rental property or even for royalties. And so those are the different types of income that typically you'll get a 1099 for.
Okay, and why is Form 1099 important?
So you have to report all of your income on your U.S. tax return. Particularly if it was sourced in the United States when you're not a resident of the U.S., or if you are a resident of the U.S., all of your income needs to be reported. And so you are going to get these forms for any time that you make more than $600 from any of these types of activities.
Mm-hmm. And are there any different types of Form 1099?
Yeah, so let's talk about the different types from the types that I mentioned earlier. The most common one is what's called 1099 NEC. NEC stands for non-employee compensation. You will be receiving a 1099 if you were an independent contractor and perform services for more than $600. Now, there are some exemptions and some reasons why you might not get one, and we'll cover those later. But generally, there's the 1099 for non-employee compensation. There's also any rent or royalties you receive would be reported on the 1099 MISC. And then the 1099K is what's used for third-party merchant transactions for things if you're using Stripe for a business or Shopify or, what have you. Keep in mind that, as it relates to the 1099K, the IRS extended the moratorium, if you will, on reporting those 1099Ks, meaning they were supposed to be reducing it to the $600 threshold in 2023, but they've extended it one more year. So you won't need to file 1099Ks unless you received either more than $20,000 from third-party merchant transactions or had more than 200 transactions. So it's still the old rules for the 1099K.
Mm-hmm. Okay, and when and how do we receive this form?
If you are a small business owner, you are required to issue these 1099s no later than January 31st. You may get them electronically, you'll get them in the mail, because you also have to send a copy of those to the IRS. They do go on your transcripts that the IRS has on you. So, the deadline is January 31st. Otherwise, they could be subject to late fees. And the reason why these are important is because on your tax return, there is an area that says, if you are a small business owner, did you issue any payments that required you to issue Forms 1099? And if you check yes and didn't issue them, then those expenses that you incurred to pay contractors would be non-deductible to your business because you did not issue the 1099s, which means that there's a good chance that those contractors are not going to be picking up the income for those activities. So, you need to make sure that you comply with the IRS and issue them. And of course, if you receive one, then you absolutely have to report it if, of course, it was more than $600.
Mm-hmm. Okay. And how do we report income accurately?
So generally speaking, you would be reporting the 1099 NECs and even the 1099Ks if you are a sole proprietor or a single member LLC where you're reporting your taxes for self-employment on a Schedule C on your personal tax return. You will be reporting those on Schedule C as part of your income. Mm-hmm. The 1099 MISC, if it's rent or royalties, that typically gets reported on Schedule E on your personal tax return. In some instances, if you get, say, a guaranteed payment, meaning you are a partner in a partnership, because you are not allowed to get paid a salary, that would be reported through the partnership, and you would report that under the partnership return. Now, if you do get a 1099 for those guaranteed payments, you're not putting that on a Schedule C, but obviously that income is subject to what's called self-employment taxes, meaning you're going to have to pay the employer and employee share of Social Security and Medicare taxes on your personal tax return. Now, there is a very important exemption, and I think we'll get to the common misconceptions about 1099s in I think a subsequent question, but that's typically about the reporting requirements.
Yeah. So one last question is that what are the common mistakes to avoid regarding the Form 1099?
One of the things just off the bat that I'll say is that, the U.S. tax code is an honor system. Okay. So just and you're supposed to report all of your income. So even if you do not get issued a 1099, whether or not you even got more than $600, you're supposed to report all your income on your tax return. So, and that's on taxpayers to do that. But the most common thing that I see is that, let's say you are an S corporation. It's a type of business entity, or you're a C corporation. And you could be an S corp. Maybe you were a single member LLC and you converted your business to an S corp. Once you are a corporation of any type, you do not, I repeat, you do not get 1099s anymore. And I see too many times where clients are going to get 1099s under their Social Security numbers for that income, which was really attached to the business that they operate. Mm-hmm. So you need to tell those third parties to stop sending you 1099s. If you either, if they're a new customer and you're a corporation of any type, or they're a previous customer and now you've converted to an S corp, and so you need to let them know not to issue 1099s, because it creates sort of a little bit of a messy situation that you have to clean up on your tax return to ensure that it gets reported properly. So that's the most common thing I see. If there's nothing you learn from today's session, it's that once you are a corporation, you don't get 1099s anymore. At least not NECs. You're not going to get a 1099 NEC anymore.
Well, thank you, Al, for answering the questions, and thank you for joining us today. We are here at the end of our episode, and thank you for everyone who has joined to watch us.
Thank you, guys.